Hey everybody, welcome back. Wanted to do a quick video update. This might be dragged out into 10 minutes. Who knows? I might be done sooner. But we're getting a lot of attention. We're brokering a lot of privately owned institution deals with REO assets as far as multifamily residential apartment complexes, the big commercial stuff. A lot of stuff. We're getting a lot of attention both from domestic investors and international investors. We're working hand in hand with some of the big dogs in the marketplace, as far as the big brokers in town, and also some of the banks that we've had past relationships with. As most of you know, I was employed by a large bank back in 2005, and we are sometimes on the end of first right of refusal on some of the assets that are non-performing, whether it's a note purchase or an asset purchase. We like to get through the due diligence and see if it's a good deal. One thing that I want to note, we're getting a lot of attention from investors that are asking for unrealistic capitalization rates, and I want to kind of clear the air on this, and I'm going to let you know what the market's trading at. This is for Florida, and basically we have another business in New Jersey, and it's trading at about the same levels in New Jersey. So whether it's New Jersey or Southwest Florida, we're specifically today's video is going to be on Southwest Florida, but Class A properties, most of you investors know how to identify different classes. Class A is trading anywhere between a 4.5% and a 6% capitalization rate. That is the market. Anybody that's asking for Class A above those parameters, you're probably looking to get priced out of the market and beaten up by your competitors. You're just going to be wasting your time and spinning your wheels because that is typically what Class A is trading for right now, between 4.5% and 6%. In fact, in our headquarters of Fort Myers, there was a unit about a mile away from our office, an asset that had 241 units. It sold at traded at a 4.6% cap rate. I believe the NOI was somewhere north of $550,000, and it sold for $13.5 million. So that doesn't mean that your future is going to be 4.6%. As most of you know, a capitalization rate is your first year yield. So whether rents go up, which they're expected to, the latest report is the projection is that effective rents are expected to go up 3.1% from the first quarter of 2011 to the end of the third quarter in 2011. So that's a big jump right there in a short amount of time. So you're going to see effective rents go up, you're going to see NOIs increase, and you're going to see capitalization rates increase from those assets that were bought on the low end. So 4.5% to 6% is what A class is trading for. B class is trading for about an 8% cap at best. You're getting anywhere between a 7 and 8% on Class B multifamily residential, and on C class you're getting about anywhere between an 8.5% and a 10% cap rate. The difference between all of this and a value-add complex is somewhere where you're going to realize a very, very low capitalization rate. This is something that's beat up, neglected, needs a lot of repairs and rehab and renovations. It's got a lot of deferred maintenance on it. So you have to look at value-add opportunities in a different light. Actually, we just did a value-add complex that started out at about the cap rate was nothing. You were basically putting money into it in the first year. But the projections, the perform after the first year of stabilization, you were looking at about a 13% cap rate. So value-add opportunities are there. There are really almost no loans for rehab money. You would have to get hard money if you wanted to do that. So those are just for basically cash investors right there. So you have to be really the right investor to look at value add. But again, A class trading for 4.5% to 6%, B class trading for about 6% to 8%. And C class is trading for anywhere between 8.5% and 10%. So those are your numbers. If you're looking for any better numbers than that, you're going to get beaten up by the competition, and you may as well just kind of look at other projects because that's what units are trading at, assets are trading at the moment. Again, I mentioned a little bit of a migratory shift in terms of the social and economic platform. In Southwest Florida, here's a good statistic. If there's a 1% shift of home ownership into tenants, that will result in additional demand of 5,800 units in a market where there's currently no market rate communities under construction right now. There's no construction going on for multifamily residential right now. So with the supply that we have that's very low and the demand that's very high, if there's another 1% shift with the amount of housing units that are down here, you're going to see a massive demand, and that's why the investor confidence is skyrocketing right now, because we know that this is likely, almost inevitably, going to happen. So it's expected that apartment complexes of this nature are going to increase in value, effective rents are going to increase, and now is the time to certainly look into buying these. A couple more statistics I want to throw out. In Southwest Florida, there were $360 million in major apartment sales, which exceeds 2009 by 387%. So investor confidence was way up. The banks were disposing of their assets a lot quicker last year. 2009, there was a lot of confusion. Nobody knew really what was going on. But in 2010, we exceeded 2009 by 387% in terms of apartment complex sales volume. Southwest Florida occupancy rates are up to 95%, up from 89% only a year ago. And again, as mentioned, effective rents are expected to increase 3.1% from the beginning of the year in 2011 to the end of the third quarter in 2011. So a lot of exciting things happen in the apartment complex world. Just so most of you know, and as most of you have worked with us in the past, the ways that we get our assets, we have relationships in place with banks. Sometimes we'll get a first right of refusal. We're working on a complex right now that's in a non-performing note status. The bank is going to be foreclosing and delivering the asset. We're in the process of doing all of our due diligence, getting a lot of the numbers put together so we can make a fair letter of intent to purchase on this complex. But investing in apartment complex is tedious, and it goes. There's different directions it can go in. In a lot of cases, you'll get, before you have interest in the property, your broker or whoever's representing you typically has a due diligence package which gives you all the information on the complex that you need. A lot of banks these days want you to do your due diligence before you go into a letter of intent. They said, you don't even bring us an offer unless it's hard, your deposit is non-refundable, so do your due diligence ahead of time. That's how banks are these days, and that's how the game is played. However, there are certain circumstances to where the banks clam up a little bit and they don't release all of the due diligence information. So those deals require, a good amount of due diligence time. So once we, open up the negotiations and go to a non-binding letter of intent, we'll always put a retrade clause in there. What we'll do is we'll make an offer based on what the bank has supplied us with a net operating income. We'll base it off their information. Because we don't have proof and we can't document everything, we have to quantify everything in the due diligence period. So all of that, it needs 30 to 45 days to really digest and get those numbers to an accurate and comfortable position to where we're ready to make an offer. So, our due diligence with these type of projects don't start until the bank actually gives us everything that we ask for and request in the letter of intent. So we're one of the bigger brokers out here. If you have any questions and if you want any consulting on apartment complexes or you want to see what our inventory is at the moment we have something in Tampa and we're also working on something in Fort Lauderdale. These go quick. There's a lot of interest on them, and on the ones that we have first right of refusal on, that's great. Sometimes we don't, and a few brokers will have knowledge of it, but everything that you see that comes out of our end is not publicly marketed. You won't see it on LoopNet, you won't see it on the MLS, so forth and so on. So even though a few other brokerages may have it, it's very private in terms of who gets access to these properties, and usually that lasts a couple months. If it doesn't sell or we don't perform and sell it for the banks, they'll give it to an agent that will list it for them on the LoopNet and all sorts of that jazz. And that's when you start getting into bidding wars, and that's why you see a lot of these bigger brokerage houses actually holding auction type sales on the property, which get really, really frustrating. But give us a call. We'd be more than happy to look over some numbers or get you in with our clients in terms of what's coming up in the future or what we have now in terms of apartment complexes. It's a really exciting time to buy, and we really look forward to working with you and meeting you. Come down here, meet us, meet the team, and we'll go from there. So again, this is Scott Allen. You can reach me at 877-688-7582, or you can email me at stallan54@gmail.com. And I look forward to hearing from you, and happy house hunting. Take care.